Good morning. It's August the 24th, 2015. Time to start another trading week and trading day, and we're opening with the financials spiked high, and a lot of times this overnight session high or the overnight session low before the day session opens quite often is the edge of the market. The market will go up in lower than normal liquidity, and it will find a price where people are willing to buy it or willing to sell it. And quite often that's in the X or Y period. So couple of big numbers. A 10% correction in our stock market takes us to 1921. 15% correction takes us to 1815. 20% correction takes us to 1708. The low volume numbers that are within reach are 1908 and 1864. So some of China's markets are off 60% over the last month. It shows you how deep it's gone. So just have to be careful. The easiest way to handle this is trade less size. Normal stops probably won't work. You'll probably just in the quick swings back and forth. If you don't hit your trading target first, will stand a good chance of being stopped out. So we just have to watch what's going on. Not much in the way of news today. I doubt if news would take front seat to what's gone on in the equity markets overnight. So just coming in this morning, collectively, Asia was off 18.27%. Europe was off 8.1%. The U.S. was off 3.2% from where it closed on Friday. So big markets. Flight to quality is what's taking the financials up. Surprisingly, gold was down. And what you'll find in the commodity markets is if you have profits in gold, if you have profits in crude oil or grains, whatever it happens to be, and the stock market gets hit really hard, then you'll liquidate futures positions to pay for margin calls. In other markets where you have more exposure. Okay, probably the biggest thing that'll save the market today is the plunge protection team. And what they generally will do is they'll let that first wave of selling, people come in on Monday morning and dump at the market. They'll let that get out of the way. Then they'll enter the market. So we'll be watching the 50 lot player in the E-mini quite a bit. For those of you that looking at the profile, and again, the profile doesn't lie. You just don't know how long it's going to take. And you can just see right here when we put everything together, you're looking at nothing but P's. And if you get the direction right, everything else takes care of itself. And you can see that if we do a Q split here, that's the correct split for the market starting up. So get the direction right, track which way volume is moving through the market. So looking at the profile right here, 2903, this move out of the middle, 2902, and then the top of the overnight session values. So the buck to 04 is probably pretty good support. Now we're going to put our price points out there, but just bear in mind that we've got extra volatility and it's going to be very easy to be stopped out. We have this high from Friday at 28, so our second buy will be against this high to 25 for buy one. Buy two. Okay, looking at where the market is right now, we have this high at 10. We have this potential tail, an X period, over the market. We've got a low volume number at 16.5 and 18.5, and you can see the market made it to 18. So selling failure to take out 16 to 20 is probably the easiest trade to see. Then we'll make it 27 to 31. It's just whichever way the stock market goes and what the Fed does today. And I'll guarantee every central bank in the world will be on the phone at 9:30 Eastern waiting to see what's going to happen. So it's just I've had the experience of living through a lot of these. When we made the most money we've made ever in that week in '87, and Friday and Thursday and Friday were sold. The bottom fell out of the market on Monday. That was when the market corrected 25% in less than a week. But the selling was over, and that's when Greenspan came in and promised anything and everything that you want to all the major money center banks, and stopped the market from breaking. So got to get this back. I got my scales right. But we do live in interesting times, and we can handle this. And it's just you don't want to be crazy when you trade days like this. But there's a lot of opportunity to be made. Normal stops won't work. They just if you don't have the skills to trade a day like today, then it's a good day to learn. Okay, the high right here is 28. Top of value is 13.14. Extension came at 18. We've got volume at 26. We've got the high came in Asia at 25. So 21 to 25, buy one. Pick up this area right in here. And then the second top of value is 13. We've got volume down here at the buck. So we'll make 1 to 5 for buy 2. It's a big market. We'll get our setups. We'll trade those. Okay, selling failure to take out 16 to 20. And then 31 to 03 for sell 2. It's just a big market, and it'll be all over the map, and just keep that in mind. Okay, I've had some requests from people, and I really to go over the profile, so we'll talk about profile after 10 o'clock today for some people that are new to the room, and see if we can't satisfy their needs. But you have to ask questions. You can't just let me go into a discourse on the profile. And we do the same thing every day. The profile information is in every one of our charts. The F4 screens, it's everywhere. It just permeates the software by design. So it's all right there. It's right in front of you if you know where to look. Okay, gold. It's kind of interesting that gold is off a little bit, but that could be because of liquidation to pay off margin calls. So we talked about this S. They got stops above that on Friday. We talked about this little K. We talked about this big K. So we had 80, basically a 75 to 80. And then we had our 65 to 68. Now it's hard to see anybody selling gold that doesn't have to sell gold. And then we got, you can just see here structurally 50, 45 to 50. So 45 to 50. As long as that holds up, we can trade higher, and we expect resistance basically 65 to 75. And the attractor up here is basically 1200. And taking out this area here, without a change in news, you'd expect to get to 1200 before it was all said and done. That would be quite a move, but look at what's happened in the world stock markets over the last couple of 3 days, or in China over the last month. Okay, we have 60, 62 is near resistance. That's sell 1. And our 65, 68 is sell 2. On the buy side, 52 to 50, buy 1. 45, 47, buy 2. Okay, we said whatever happened in China, if China had problems, the euro would go higher. Boy, they've just got to be pulling their hair out in Brussels and Frankfurt and Paris and Berlin and every place else. There's a government that's centered, but I mean, it's news driven, and we've got this 1540 area right here, this spill that you can see from the 1550 area. We've got 1600's a high volume number, and we've got basically 1700. So big market. It can go higher if things get worse in China. And it's China has problems with their markets. Buy the euro. So you can see we haven't, in 180 days, we haven't been up here. So this 1550, so 1540 to 50, failure to take that out. Maybe 1525, 1550 sell failure up there to pick up our 2 points. On the buy side, London's low is 1458, 1450, and then we've got volume at 1500. So 1475, these are wide. Buy 1. 14 and a quarter, 1450 by 2. Crude oil, it was below 39 bucks when I looked at it earlier. The crash, the low of the last crash was 33 bucks. And when you're a one-trick pony, the only thing that you can sell is crude oil. And you come in and you screw with the market, playing games with it. The best minds in the world, plus a little bit of paybacks involved. Saudi Arabia used to be the buffer that kept anybody's economy that was based on crude oil running along okay. There was a lot of resentment because they were the ones that had to eat up the slack, but given their population, the rest of it, they were best suited to do it, and they willingly did that for years, but they don't do that. They chose not to do that this time. And they've had a real ally in our U.S. government that has discouraged energy production every way they imaginable in the United States. But we would be the exporter of choice to a lot of the world. We would be the exporter to South America that has to import it, as opposed to bringing it from Africa or the Middle East. And they saw that as a threat. And our government has kind of gone along with them by not allowing us to do what we do best, produce and make things. So, but even that has not stopped a glut. And then this latest bright move by our government and the governments in Europe, probably under pressure from the United States, is to release Iranian oil on the market. And a dictator doesn't care. They need cash flow. If they have to sell crude for $1 a barrel, they'll sell it for $1 a barrel. They won't shut it in. And that's where the problem is. So Saudi Arabia, the geniuses in Saudi Arabia, combined with the geniuses in China and their policies, and the stage was set by the geniuses in G20 banks around the globe. None of these two countries did it by themselves, and here we find ourselves. So 33 is a pretty important price point. If we can stay above that and that market starts to stabilize, and it might take a year or two, these low prices to stabilize it, but the market can start to come back. It usually takes 18 months, and that would be December of this year for the selling and to be over. And then the market can start thinking about coming back the other way. So here we are in crude, and 38.50, 38 and a quarter, buy one. Let it go a little bit lower than 37.70. We'll make it 37.75, 37.50. And we'll just have to take our signals and see what they are. Profile told us we were headed lower, and we have traded lower. So 39, 39 and a quarter. This high volume area right here is sell 1. This spill 39.75.40 for sell 2. So the biggest thing that can turn markets today are going to be central bank intervention, plunge protection team. And it'll take crude oil higher. I believe it would take crude oil higher. All the risk on markets that have been crushed would probably snap back, and we'd see treasuries come off. And 30-45 minutes after the opening of the stock market is when it's most vulnerable for the Fed to come in and try to hand as many traders their heads as they can. We would go to jail for trying to do something like that. Okay, I put some numbers up there on the E-mini. And obviously 1900, but 1908 was a low volume number, and we're through that. Looking at the then 1884 was a low volume number. Excuse me, 1864 right here was the next low volume number, and we've got volume 84 to 74. So say 75 to 85 because of this volume might hold. We have the bottom of value over here. Then our 64 area, and beneath that you can see 1850, 1864. So big numbers down here. So 75 to 85, then 1850, 1864. 1908 now is probably pretty stout resistance. Then we have all the way up here 1928, 1930s where volume is. So 1908 is the low volume number, 1930 is basically the high volume number. So this is catastrophic in some people's view. Perfectly explainable, to us and people that follow the markets. So my numbers that I put out for this market are probably not very good anymore. So I mean, you got 1903 to 1910. So failure to take out 1903, 1910. You say, Jesus, Charlie, those numbers are pretty. They are. It is very wide, but I mean that's what we're dealing with. We have this X period high at 23. Got the value area low at 13. So 20 to 25 would be the spot. We're going to make 85, 87 by 1. And then our 70, 75 by 2. You can see we're in new territory, so. And we'll just have to play it by ear as we move along. So be back with you as soon as I can.